Hello, everyone. I trust you're having a fantastic weekend out there. Get ready for an in depth exploration into our weekly price action based technical analysis series. Today, we are making a surprising return to the USDJPY market structure after over 5 months of inactivities on these financial assets. Some interesting setups have caught my eye, prompting a reconsideration for this week. Fundamentally, or should I say economically, the expectations of the Bank of Japan maintaining its ultra-dovish policy stance might limit any upside potential for the Japanese yen. Meanwhile, reduced bets on a more aggressive Fed easing following US inflation data could support the US dollar, potentially pushing the USDJPY pair to new highs. I'm beginning to see an interesting trading setup ahead of the new week, and I am very much eager to share it with you. Join me as we explore the potential trajectory of price action using our basic tools such as trend lines, key levels, and chart patterns to guide our technical analysis. But first of all, a quick reminder here, this video is for educational purposes only and should not be considered financial advice. My goal is to provide insights into the USDJPY chart, enhancing your understanding of price action analysis. Remember, forex trading involves inherent risk, so exercise caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's dive right into the details. So our analysis for this week is going to begin on the daily time frame, and in fact what I did on the daily time frame was to take into consideration the nature of price action since the beginning of last year, 2023, and it is quite obvious that price action has been on a strong bullish momentum. And as a result of this observation, I was able to connect a series of higher lows here, giving me a beautiful ascending trend line. In fact, we have a couple of them. We have this one right here, and of course when I projected this to the other pivot lows, we have the major ascending trend line. So in summary, it's more or less a bullish momentum throughout the course of last year. Then in addition to this trend line, we want to acknowledge the fact that price action hit an astronomical high at the 152.00 level, which happens to be the second time in the last 1 year, 3 months, as you will see here during the month of October of the year 2022. We saw how price tested the 152.00 level. And of course, the same thing also happened again during the month of November of last year, as we saw a double top structure around that area to incite price back into that ascending trend line we spotted earlier before some bullish momentum began since the beginning of this year. Now, in addition to the structures, to make things a little bit easy for us to be able to position ourselves in such a way that we can capitalize on the next move, we have a key level that we shall be using to guide our trading decisions for this week. In fact, I was caught in a dilemma here as we have between the 144.00 level and the 144.800 area as a key zone to look out for in the coming week. And of course, you know how we use our key levels in this community. As long as price remains above the key level, we want to be looking out for patterns and structures that supports the idea of buying the asset. But if price drops below the key level, we definitely want to be looking out for selling opportunities. But as it is right now, and with our key level marked out, and with the fact that price remains above the ascending trend line, I have a beautiful setup on the 4 hours time frame, which we will be using to guide our trading decisions for this week. But before we go into the details on the 4 hours time frame, it is important that we keep tabs with the fundamental factors that will be affecting the market sentiment for this week. And for those of you who have been with me for a while now, you know how important this is, that by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So right on the economic calendar and based on the asset we are looking at, we shall be focusing on the economic features from the United States and the Japanese economic docket. Now, for this week, we do not have any high impactful event for the Japanese yen. So what I did was to include the median impact. So we shall be looking at that in a moment. So the first impactful event, I will be looking at the most important ones for this week. The first one here is coming in on Wednesday, and that is the retail sales data from the United States, which happens to be a key economic indicator that measures the total receipt of retail stores representing consumer spending. Its impact on market sentiment is very significant as it provides insight into the health of the economy and consumer confidence. Now, the next one is coming in on Thursday, January 18th, and that is from the Japanese economic docket, and this is the Consumer Price Index, which of course examines the average change in prices paid by consumer for goods and services in the last month. A higher than expected CPI can lead to concerns about inflation, impacting market sentiment as it may prompt expectations of tighter monetary policies to control rising prices. Then fast forward to Friday, January 19th, we look forward to the publication of the University of Michigan, that is the Consumer Sentiment Index, which gauges the prevailing sentiment and confidence level among consumers, providing valuable insights into potential shifts in economic conditions. So these are the impactful events we shall be looking out for this week, and of course, as technical traders, we do know that the anticipation of this event usually affects the market sentiment, which of course would reflect on the chart as price action. So talking about price action, we shall scale down into the 4 hours time frame, where I have a simple setup that we will be using to guide our decisions for this week. And what I did here was to consider the nature of price action in the last couple of months. And the first thing you would observe here is that throughout the course of the later part of last year, price action was consistently finding lower highs, and after connecting that, we have a descending trend line to work with. And at the beginning of the year, we saw how price broke out of the descending trend line, though this did not catch us by surprise at all, as we did have an ascending trend line that guided the breakout of that descending trend line, as you will be seeing right here. And going into the new week, this ascending trend line will be guiding our trading decisions. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying. And we are not going to be considering selling unless the ascending trend line is breached and broken to the downside. And as it is right now, price action is back into that key level we identified on the higher time frame at the 144.800, and interesting enough, price is sitting above the ascending trend line. And what this simply means, and considering the fact that we had an hammer candle close around this area after a sharp rejection of the ascending trend line, I'm of the opinion that we shall continue to look out for buying opportunities as long as price action remains above both the ascending trend line and our key level. So at the beginning of the week, if we continue to see buy pressure above the structure, we shall be positioning ourselves for buying opportunities. And if it so happens that price breaks down the ascending trend line, then we shall start considering selling opportunities below that particular structure. But trust me, I will be with you in the comment section on Monday morning after monitoring our participant in the market. Will be reacting to this particular structure during the early hours of the new week to give you an update on what I think is going to be happening around this area. If you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.